What if I told you that the recent stock market crash isn't another financial crisis, but actually part of an ingenious plan by Trump to rescue the American economy for the long term? To answer this question, let's take a look at the market. During the first 2 weeks in March, the S&P 500 erased an average of $340 billion per day in market value. The Nasdaq is just a few percentage points away from being in a bear market, and the Dow Jones has erased 7 months of gains in that same time frame. But there's substantial evidence suggesting this market decline is exactly what Trump anticipated, and possibly even wanted. I know that sounds crazy, but consider this. During his first term, Trump touted stock market highs over 158 times. He consistently used the Dow Jones as his economic scoreboard. Now, however, he has publicly stated that he's not even looking at the stock market right now.
No, nothing to do with the market. I'm not even looking at the market because long term, the United States will be very strong with what's happening here.
So what changed? The answer lies in $9.2 trillion of US debt that is due for repayment in 2025 of this year. To make matters worse, a whopping 70% of it must be refinanced between January and June of this year. Trump does not want to refinance this debt at current interest rates, which is why many are claiming that Trump is allowing the market to crash so interest rates fall as low as possible before the deadline to refinance. And as it stands now, the average interest rate on US debt is currently 3.2%, the highest since 2010. If rates remain high, refinancing this massive debt will cost hundreds of billions of extra dollars, worsening the ongoing fiscal crisis. Remember, just days after entering office, Trump pushed for Fed Chair Jay Powell to lower interest rates, and he didn't listen. So instead of continuing a direct battle with the Fed, Trump appears to have shifted to Plan B, using market psychology to achieve his goal. By creating strategic uncertainty through tariffs and policy shifts, he's triggering a flight to bonds, naturally driving down interest rates.
I think CEOs want to see predictability. They say, look, I have to speak with shareholders. I've got to make plans for CapEx spending. I can't if it's 20% one day and then it's off for a month and it's 25%.
Yeah.
So can you give us a sense of whether or not we are going to get clarity for the business community?
Well, I think so, but the tariffs could go up as time goes by, and they may go up, and I don't know if it's predictability. I think
so. That's not clarity.
No, I think that they say that. It sounds good to say, but for years, the big globalists, have been ripping off the United States. They've been taking money away from the United States, and all we're doing is getting some of it back. And we're going to treat our country fairly.
The 10-year yield has already dropped from 4.8% to 4.25%. And the closer we edge to a recession, the lower these yields will go. While Wall Street frets over short-term market dips, this could be setting up a long-term economic reset that benefits every American. Low interest rates means mortgage rates become more affordable, business loans become cheaper, consumer credit costs decrease, housing market constraints ease, capital investment becomes more attractive, and perhaps, most importantly, small business expansion becomes more feasible. Trump's team has been explicit about their priorities. They're focused on Main Street, not Wall Street. As Trump recently stated, you can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters. You have to do what is right.
Before you came into the Oval Office the first time, you were a very successful businessman, very successful real estate executive. And a lot of people said, oh, this is the business president. This is it. He's watching the stock market. He knows all about, he doesn't want the market to go down. And now we've got tariffs and the market has been going down.
Well, not much. I mean, in all fairness.
You said, look, we're going to have a disruption, but we're okay with that. Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that. You have to do what's right.
Now here's where it gets interesting. The strategy involves creating enough market uncertainty to force multiple outcomes. First, we're seeing a natural decline in interest rates through bond buying. This creates pressure on the Federal Reserve to consider rate cuts. When you understand these pieces, the bigger picture becomes clear. This isn't just about market movements, it's about fundamentally restructuring the American economy. The current economy is heavily dependent on consumer spending and imports. The administration's strategy appears aimed at shifting toward a more balanced model with increased domestic production and investment. This isn't just about manufacturing, it's about fundamentally changing how the American economy functions. This strategy extends beyond just market mechanics. As Trump recently highlighted to Maria Bartiromo, falling energy prices are always playing a role in this equation. Lower energy costs naturally reduce inflation, which adds even more pressure for rate cuts. With all this being said, it appears we're witnessing an attempt at economic restructuring on a scale rarely seen in modern times. While the mainstream media focuses on daily market moves, they're missing the bigger strategic picture. This isn't about the next quarter, it's about the next decade. The coming months will reveal whether this bold economic strategy achieves its intended goals. But one thing is clear, this market decline isn't random. It's part of a larger plan to fundamentally reshape the American economy. If you found this analysis valuable, make sure to subscribe for ongoing coverage of this developing economic strategy. We'll be watching these developments closely and bringing you updates as they unfold.